Jados, what are you doing?
Man, I'm bridging.
It looks more like planking.
Oh.
Today, we're going to take you through how you can bridge by buying and selling your home at the same time. Let's dive right in.
All right, Nados. So this is a common thing we see. You might have just you might be expanding your family, your first home might be getting too small, and you might be in a situation where you own an existing home, but you want to buy a new one without having to move out and rent in between. So is there a solution for that?
There is indeed. It's called bridging finance, and that's effectively where you will be given that little bit of wiggle room where you can buy and you can keep your existing home during the interim so you don't have to rent and move about.
So I guess selling your existing home and buying a new one at the same time can be pretty tricky. You can have heaps of debt, you're going to potentially have lots of expenses, and it's a whole juggling. You have to either move from your existing house to a rental to a new home. It's a pain in the ass. Now, is there criteria that you need to qualify for this, or if I've got an existing property, I'm sweet?
Now remember, it depends on the bank. Every bank is different when they look at bridging finance. Some banks try and see if you can afford the total debt that you'll have. Some banks don't look at the total debt, they just look at the end debt that you're going to have.
So now, in other words, that means you'll have the loan from your existing home, you'll have the loan from the new home. That's the total debt. So at that point, you could have millions of dollars in debt, how are you going to make your repayments on that?
That's right, and that's why every situation is different. The first thing that you need to be aware of to qualify is you do need equity in the property. What that means is if you've owned your property for a period of time and the loan's gone down, the property values increase, well then you may be in a position where you can look at bridging. The other thing to qualify for bridging is generally you will need to sell your property within a 6 to 12 month period of the actual purchase for the new property taking place. So there is a time period and you don't have 6 to 12 months to work with to sell the property, and that does have to happen. So the banks are very tight on ensuring that you do sell within a specific time frame.
And the other thing is you actually have to list your existing property pretty quick. A lot of banks require you as a condition of approving the bridging loan to already have your house on the market. So if it's going to need some fixing up and a bit of repairs, you need to have that sorted before you apply for a bridging loan.
The other thing to remember is during the bridging period, the full debt that you're going to have will be incurring interest. So it is a cost to you. Now, once again, think of it like if you were to pay rent, it's going to be an expense anyway. So keep that in the back of your mind that you will be paying interest on the loan, and some banks, once again, will allow you to continue to add that on top. We call it capitalization of the interest. So it's not necessarily coming out of your pocket initially. It will obviously balance itself out once you sell as a cost.
All right, Nados, let's talk brass tacks now. So how much can I actually borrow? Can I buy the whole amount of the new property? Do I have to sell? Like, what can I get? Do they let me do 100%? How does it work across both properties?
So remember, we talked about ensuring that the property has equity. In an ideal scenario, we wouldn't like to lend over 80% of the property, as once you're over 80%, you start paying mortgage insurance. It is still achievable if you were to pay the mortgage insurance, however, just not ideal because it adds costs.
All right, Nados, so walk us through, what are the pros, the benefits of getting a bridging loan?
I guess the first one is the immediacy factor. If you fall in love with that property and you want to buy it and you need to get in the market ASAP, well, bridging finance will have you covered. Second is it does allow you to borrow 100% plus stamp duty and costs, provided you've got enough equity in the property. So necessarily you might not be out of any monetary amount, provided that the property has enough equity to allow you to do that. Remembering as well, you can have the interest being added to the loan, so you don't necessarily need to make any payments on the bridging amount during the bridge period. And the last pro that I see of bridging is it saves you from having to move twice. So you can literally get that nice home that you wanted, move all your stuff out, and then have your other property sold within that 6 to 12 month period, and also ensure that you get the best offer for your house without having to rush it.
So some of the negatives and the drawbacks of bridging, I guess the first one I would think of is that you're double paying interest. So interest is compounded monthly. Like Nathan said, fortunately there are banks that will add the interest charge on your old property on top of the loan. So it's not coming out of your cash, so you're not going to be on struggle street doing that, depending on your lender. Now, is any other drawbacks of bridging that you can think of?
I can see probably two there, Jaden. One is that on the bridged amount, the banks do charge slightly higher interest rates, so it can be a little bit higher cost. Once again, if you compare it to your rent, you can probably do an analysis and see what makes the most sense if you were to rent out, move, all those costs associated. The second is that you do have a set period of time you need to sell it. So remember, it's 6 to 12 months depending on the bank, and during that phase, the bank is very much expecting you to have the sale completed. So if you do extend past that period, you will find that the banks will put a lot of pressure on you. So you do need to sell within a very specific period of time.
So that's it today, guys, for bridging. It is out there. It really works well if you've got an existing home and you only want to do that one move. There are some drawbacks in those extra expenses, but if you've got a family, if you've got kids and you're working full time, that extra convenience factor can really help and maybe make that decision a bit easier for bridging. If you've got any questions, make sure to leave a comment below. If you like the video, give us a thumbs up. And if you've got any more questions,
hit us up at huntergalloway.com.au. And as always, thanks for watching.